Hello and welcome to AI Market News by LM. This week, we're diving into a big question. What's actually driving the markets? Is it fear or is it greed? And honestly, right now, it feels like both. We've got this massive tug-of-war going on between all the optimism you see in the headlines and this, real anxiety that's kind of bubbling just under the surface. I mean, if you just glance at the surface, you'd think it's all good news. The CNN Fear and Greed Index? Yeah, that's sitting on a pretty confident 68, squarely in greed territory. But, that one number doesn't tell the whole story, not even close. So let's dig in and see what's really going on behind the scenes. All right, so let's get into our first section here, which we're calling nervous optimism. And that phrase really nails it. On one hand, you've got these headline numbers that look fantastic. They're pushing the markets up. But if you know where to look, there are some pretty big warning signs flashing just below the surface. And you can see that optimism right here. Look at the futures market. Everything's pointing to a green open for this holiday-shortened week. Both the S&P 500 and the NASDAQ 100 are ticking up nicely. This is that good news part of the story, right? This is what's feeding that greed reading we just saw. Okay, but here's where things get interesting and a little nerve-wracking. This table shows a massive contradiction. So the big indexes are up, right? But look at the number of individual stocks hitting new 52-week lows versus new highs. It's not even close. We're talking more than 4 times as many stocks hitting lows. What that tells us is that this rally is incredibly narrow. It's basically being held up by just a few mega stocks. And, well, that's often a big red flag for stability. And this right here, this is the anxiety in chart form. We're seeing a huge spike in volatility, especially in the tech sector. Basically, the expected price swings for tech stocks are getting wild, way wider than the rest of the market. We haven't seen levels like this in over a year. And the big reason? Well, it's those whispers about a potential AI bubble. It's making everybody really jumpy. So you might be asking, with all this nervousness, why are the markets still climbing? Well, the answer really comes down to one thing: the Federal Reserve. There's this massive hope building that the Fed is about to give the market the one gift it really wants for the holidays. It all came down to this one quote right here. New York Fed President John Williams, who, is a super important voice and is seen as being really in sync with the Fed chair, he said he sees policy as moderately restrictive. That's it. That was the magic phrase. The market heard that and just ran with it, immediately sparking all this talk about a rate cut coming as soon as December. And you can see the impact almost instantly. After those comments, the odds just flipped. The market is now pricing in a 2 out of 3 chance of a rate cut this December. And that hope, the hope for cheaper money, well, that's the rocket fuel behind that greed number we saw at the very beginning. Okay, so where can we see this battle between hope and fear playing out most clearly? Easy. The tech sector. It is the absolute epicenter of this market's tug-of-war. Let's take NVIDIA as a perfect example. You've got the bull case. People are getting super excited about whispers that US officials might let NVIDIA sell its advanced AI chips to China. I mean, that would be absolutely massive. But then you have the bear case. Those same AI bubble fears keep popping up. Plus, there are real questions about whether China would even be a buyer. It's just a perfect snapshot of this market's split personality right now. All right, so this whole push and pull thing isn't just an equities story. Nope. It's spilling right over into the global currency markets, which is just adding another whole layer of what happens next to the mix. Let's head over to Japan for a second. Officials there are really starting to talk tough. They're putting out some of their strongest warnings we've heard in a while, basically saying they are ready to jump in and support the yen, which has been taking a nosedive. But here's the thing, so far, the market just isn't buying it. It's almost like they're calling their bluff. The yen is still just kind of stuck near its yearly lows against the dollar. And at the same time, you've got the dollar and the euro locked in this holding pattern. Like traders are just sitting on their hands waiting for the next big data point before they make a move. Okay, so we've got all these mixed signals flying around. What should we actually be keeping an eye on this week to see which side wins out, the fear or the greed? Well, taking a look at the calendar from investing.com, the really big one is on Tuesday. That's when we get the US retail sales data. This number is huge because it gives us a direct look at the health of the consumer. Are people still out there spending money? After that report drops, things are probably going to get pretty quiet since US markets are closed for the Thanksgiving holiday on Thursday. And that all just brings us to the million-dollar question as we get into the home stretch of the year, right? Can this year-end rally keep going? Is all this hope about a Fed rate cut enough to keep things pushing higher? Or are all those underlying worries, the narrow market, the tech bubble fears, are they finally going to win out and pull everything back down to reality? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.